I can tell that US, futures, I think, okay, the market is closed for today, but there seems to be a lot of excitement going on. Let's see if that excitement flows to the Nigerian markets with Will Ibon. Will, happy World Trump Day today.
Happy World Trump Day.
Exactly. I think we should remember January 20 as
Yes.
World Trump Day or Global Trump Day.
We'll always mark this day. Don't forget it. It's going to be going to the calendar in the Times
As World Trump Day.
history. You know, it also falls, Martin Luther King's Remembrance Day.
Yes, I think that's why the markets are closed.
Yes, the markets are closed, and also, for the inaugural ceremony, everyone wants to be part of it. Unfortunately, Trump will be at WEF, that's World Economic Forum.
No, he's going to be doing virtually. Yeah, so he's still going to be at the White House.
Important day for him today.
Yeah, he's going to be very busy.
I call it the second coming of Trump.
And don't forget how many executive orders he has said is going to pronounce today as he's sworn into office. And even the Ukraine-Russia war is also hanging on him because he did promise us he was going to take care of that even before getting into office.
Of course. But you know that Trump, this is one of his signature things. When he comes in, he has papers, always signing executive orders. So I want to take it about 4 years for him. So let's just go and see how this roller coaster, well, if it's going to be a roller coaster or it's going to be smooth sailing for us or in other parts of the world. But let's just see the market performance in African markets. Well, we see that intraday, the major markets were in positive territory except Nigeria. We see Nigeria trading in negative territory. We don't know if they're reacting to Trump coming, but maybe the markets will tell us or analysts will give us insights into that. But we'll see Nigeria's NGX in negative territory, 0.14% at intraday. 102,000 points, not bad. Hopefully we stay there. And the GSC in South Africa is 0.24% up at intraday. Let's look at Egypt's EGX. They were also up in the green, 0.34%. But Kenya closed Friday session in the green. We're hoping that, they sustain that positive momentum and close positive at the close of business today. But let's dive deeper into what's happening at the NGX. And let's bring in Onose Asotie Enaolo, is investment analyst, Main Street Capital. Onose, good afternoon. Last week, we saw the market having a big drag. We saw it down 2.94% in last week's trades. Negative sentiment still persisting at intraday as we saw now. What are these stocks driving this negative performance?
Hi, Will. Thanks for having me. So two things. There is the fundamental part and there is the technical part. One thing that's fundamental, we've seen some really high cap stocks. We've seen sell activities in high cap stocks, especially for last week. If you look at Dangote Cement, which is a large cap stock, one of the largest capitalized stocks, we see a fall from about 278 naira to about 380, 390 naira at the end of last week. So we've seen some really, high cap stocks, really take people selling in some of these stocks. Now, on the technical aspect, if you look at the chart, you find out that, the rally that we saw starting in November, December, up until, first, second week in January, it brought us to the all-time high, close to the all-time high. So if you look at the chart, we are close to a very key supply zone. And last week's negative price action was just price, rejecting that supply zone. So you now have to watch what happens, during this week, to kind of determine whether we're going to go lower technically or even now go back to retest the zone.
What's happening at intraday, I just can't help but bring up the fact that markets, as I said earlier, could be reacting to Trump's second coming. Now, talk to us about what this means for markets in Nigeria, especially as Trump regains the helm of U.S. leadership.
Yeah, so Trump coming into power or coming to his inauguration, there are a couple of things, and all of these things really hang around his economic policies. Now, we know that Trump is big on deregulation in the energy and the finance sector. Trump is big on, America First trade relations, and, a couple of other things, immigration and all. But when you're focusing on more of the economics, what we see right now is Trump wants lower taxes, lower tax rates, and he's not really that bothered about inflation. So right now, he's even a bit at odds with, the Fed, which is really worried about inflation right now. And so now people believe that Trump's policies, one, may cause some tensions, geopolitically speaking, with the US's trade partners, and on the other hand, it may lead to really high inflation. Now, if you have really high inflation, then the Fed is going to want to come into, stop slashing rates first and start hiking rates, to combat that inflation. And then we saw that happen in the market last week, where even a lot of risky securities in the US market declined last week, or the second week of January, because the Fed expressed some caution. Now, if that happens and the Fed starts to hike rates, then the value of the dollar in the international markets becomes stronger. Even also with Trump's policies, the regulation, if we do see economic growth and a stronger GDP, then it might trickle down to the US dollar. Now, if that happens, you have a situation where the CBN might be under more pressure to defend the naira, and they might have to defend the naira a bit more aggressively, which might impact, our foreign reserves, the way it goes right now, and even imports and exports um, activities, with different companies, especially with consumer good companies that are currently carrying dollar denominated debts. If we do see a stronger dollar, then they may also be even further negatively impacted, in the Nigerian market.
Okay, so if Trump is talking about tariff, he's been talking tariffs, lower taxes. How do we see this? Is there any way Nigerians or Nigerian exporters or manufacturers can leverage on this to probably make cost of doing business easier for them? Is there any way we can benefit from this, even though it seems like it's, America first right now?
Well, I think one of, off the top of my head, if you do want to, the best way will probably be through oil. I know that there have been situations where even the Nigerian government and other Nigerian companies have been making, strategic moves in the energy sector to really boost, oil revenue. Right? If we do want to survive this first as an economy, then we are going to have to boost our oil, our oil earnings, so that we can boost our foreign reserves. Another thing is basically just the exports. If for companies that are in situations where they can export, to export goods and services, and export goods that, I guess the US economy or US firms or companies will want, so that you could earn foreign exchange, right? Because I believe that the best way that we, at our current level right now, can really edge against this is to earn, as much foreign currency as possible to kind of offset the possible decline in the naira that is expected if, the US dollar, starts to really push up.
Further, speaking of, you mentioned oil, ramping up production, of oil. We saw in the news last week that Oando recently won a bid round in Angola for the Kwanzaa Basin block. How does this help Oando's current situation? We do know that investors have been clamoring for Oando to, start, giving them returns for their investments, basically. So how does this help Oando in this situation? We do know that it's more expansion, but how does it really trickle down to the bottom line of investors benefiting from this bid round?
Well, short answer: higher production capacity. The more onshore oil fields that they acquire, the higher their, well, theoretical production capacity. So I think right now, with the acquisition of the successful bid in Angola, I think that puts Owando's production capacity at about, I think, 100,000 barrels per day. Now, if they can live up to this particular output capacity, then hopefully they could increase their revenue. Right now, their financials, they are profitable, not wildly profitable. Net margins for 2024 was about, I think, 3%, which was even down from about 9% previously. But any avenue they have to increase their revenue is positive. Because if they can increase their revenue, then they can have more positive cash flow to even maybe pay off whatever debt or foreign exchange issues they might have, and then move further into positive, profitability rather. So I believe these strategic acquisitions are sensible at this point in time, and if they can just really ramp up their production capacity, then we could actually see more revenue and possibility, moving forward.
Thank you so much. Investors will be waiting with bated breath for that. I know many of them will. Thank you so much, Nonsa Asotie, now law investment analyst, Main Street Capital, for joining us in Business Incorporated.